Okay, guys, let's begin Saturday webinar. Before I start, can all of you hear me? There was something wrong with my mic just now. If you can hear me, just type yes. Okay, thank you. So, let's begin. So, on Friday, which was yesterday, we do have a market correction now. Okay, of course, I mean this drop here wouldn't be classified as a correction yet. It is still like a 1 day candle drop, but you can see that even on Thursday, right? The market gap up originally due to strong earnings from Meta and Microsoft, but even during the intraday itself, there was some weakness showing lah. So on Friday, we do have a few things that came in which led to this drop. Firstly, there were new tariff being established. I think tariff towards Taiwan was raised to 20% if I'm not wrong. And along with that, there was some other tariff being issued also lah. Okay. And not only that, we do have the NFP came out, the job reports number came out, which wasn't that strong. It sort of missed the estimate lah, and that sort of contribute to the drop also. And of course, finally, Amazon did very bad for their earnings, which considering that it is mega cap company, right? The decline in Amazon, which was about 7-8% like that, if I'm not wrong. Yeah, Amazon dropped about 8%. It kind of pulled it down along like it pulled down the market also lah, along with other corrections such as Meta, Microsoft sort of came back down also. So we do have quite a variety of stuff that is causing the market correction lah. And what is also kind of a little bit more extreme is we see the 10-year yield suddenly went down by so much. 3.79%. So initially it was somewhere around 4.3%. It is now at 4.2%. So we have yet to see the yield move this much lah. The last time we saw this kind of movement was back in the tariff, the original tariff day lah. Okay, so we do have quite a lot of stuff that's coming in, and not only that, if you are looking at the CME Fed Watch data, right, 80% probability that in September there will be a 25 basis point rate cut lah. Okay, so I think this definitely caused the yield to come down also, because if there's a potential rate cut incoming, then of course the yields are going to come down lah. Yeah, so then we also have ISM manufacturing that came out sometime around 10 p.m. like that. So everything is regarding tariff lah. Okay, so the ISM manufacturing dropped by 1 point, and a lot of the comments were based on tariff. So I don't really want to go through them because for the last 4 or 5 months, everything has been related to tariff. But there are some that I want to sort of point out specifically. Chemical products. The comment here say that sales continue at unprecedented growth driven by data center construction. Customers and sales team continue to demand lower pricing, which drive down gross margin in the face of input price increases, primarily from aluminum imports. So a lot of aluminum were being used for data center construction lah. So I'm not sure where is the chemical product in this case. So I'm guessing something to do with residential or commercial constructions, okay? Because sometimes you need certain chemicals when you are dealing with huge commercial construction buildings lah. So maybe this is something that we can isolate any chemical product companies that deal with data center construction. Is something that we can take a look lah. Okay, so the other one that I want to point out is also apparel, leather, and allied product. The tariff war are beginning to wear us out. It has been very difficult to forecast what we will pay in duties and calculate any cost saving we have this year. Also, tariff had disrupted our custom import bond. there is zero clarity about the future, and it had been difficult few months trying to figure out where everything is going to land and impact on our business. So far, tremendous unexpected cost has been incurred. I think this also definitely impacted Lululemon as well. If you are still holding Lululemon, right, the main cost of Lululemon drop is due to tariff, and not only that, they are decline in growth lah. So with the overall tariff issue is still ongoing, right? Probably that is causing Lululemon to drive further down lah. But in fact, Lululemon is not alone. Also, other apparel companies are also facing similar challenges. Okay, so this is something that we may want to take a look also. But overall, when the ISM data came out, the market actually kind of recovered a bit. So you can see, right? This is the S&P chart on a smaller time frame. So when the NFP data came out, you can see there wasn't really a lot of price movement there. I mean, the reaction was somewhat muted lah, but as soon as the market opened at 9:30, right, immediately the sell down all came in. And somewhere around 10 p.m. like that, after the ISM data came out, there was a brief recovery because weakening in ISM manufacturing may also um, relate to rate cut, a potential rate cut lah. So there was a bit of relief rally, but towards the end, right, we do see the market kind of continue to go back down lah. Okay, so now from a technical perspective, if you take a look at the technical, we do see the S&P 500 going into slightly peaking into overbought zone now, okay? And with yesterday drop, right, we are now below the moving average, the 20-day moving average, and you can see the MACD line has crossed over the signal line also. And if going forward, if we see more red candle coming up in the next few days, right, of course you will expect more downside, okay? So now, the last time we have seen a overbought state in S&P 500 was all the way back in July 24, and after that we do have a quite a sizable correction now. Okay, in this case we are looking about 10% drop, a potential 10% drop now. Okay, and this is the reason why we prematurely set up the hedging position on SPY yesterday, and hopefully you guys manage to get that SPY position in, be it a short sell position or a option position. If you manage to get it in, right, it should be able to buffer your portfolio by quite a bit, because market didn't really gap down. Market was actually doing somewhat okay until it opened now. Okay, you can see during NFP period it wasn't like rallying very high or going down in an extreme manner. Only when the market opened here, you see the big drop that came in. Okay, so if you manage to enter your order as soon as the market open, right, you should be doing relatively all right. Okay, so now firstly, I like to apologize because I haven't updated my portfolio yet. There's a lot to update, so I wasn't able to update in time, but I will update it in this week, and then next week I will share the portfolio lah. Okay, but nonetheless, I will still go through some of the positions that we are holding. So now, firstly, Carvana. One thing I want to go through about Carvana is that when we take this trade, right, the what do you call that? The stop loss has been given to you, and I believe the stop loss was $360. It was somewhere around here, or is it? Yeah, $360 somewhere around here. So we actually we entered somewhere around here, and then after that Carvana kind of recovered, and then it hit 360, and by this point, right, you should be out already lah. Okay, your stop loss should be triggered, you should be out already, you should not be like continue to hold on some more, because if not you are going to kena this lah. Okay, so if you kena this, then unfortunately you better get out. So I do hope that you are not still holding. Of course, if you are still holding, then your losses may narrow a bit lah because of yesterday's sell down lah. But this is something that you wouldn't know when the market open, right? You have no idea it is going to sell down like that, or even on Thursday itself, right? You have no idea that Friday is going to sell down like this. So if you may be lucky this one time, but if you continue to do this kind of behavior over a very long period of time, right, you're gonna lose a lot more money than you can actually get lucky and get out, okay? And it is especially more important for short position because no matter what kind of stock, I believe it can recover if you hold certain stock, as long as that stock is like not a very meme stock or a shit stock, right? Eventually they can recover lah if you do some kind of fundamental analysis. So if you like park that stock in your portfolio, maybe after holding 2 3 years, you may actually recover back. But for short sell position, right? It may never come back down. Once it goes past your stop loss, right? It may never come back down. So your loss will go into like 2 times, 3 times, 4 times is very, very dangerous. Okay. So for example, right, let's say you decide to short here and then you put your stop loss there. But after that, the stock kind of broke through your stop loss, and then you feel that actually can come back down. And you can see how the stock never go back to that level. Even at this point, right? I don't think it can go back here until this much. In fact, the danger of Kavana going up is even the risk is higher lah. Okay, so when you are dealing with stock position, right, obey your stop loss at all costs unless you are doing some kind of pair trading, spread trading. And if you are not familiar with spread trading or you are not experienced enough to execute a spread trading, right, then I would suggest that you obey your stop loss at all costs lah. Okay, so this is for Kavana. Next we have Dropbox that is we are still holding on to it, and as I mentioned before, my position on Dropbox is very, very big. The reason why it is very big is because I don't really have any other short position. So Dropbox is like accounting for 2 or 3 position worth of short lah. Okay, so we can see that in the past 4 days, right, it has kind of crashed back down to the lowest level already lah. Okay, the lowest level that we can see for quite some time. So previously it was at around $26. Now it's back to 26.46 like that. And the earning is coming out on 7th of August, which is next week. So now, personally, I am going to hold through the earnings. I do think that the earning can make this stock worse, lah, okay? But if you entered it somewhere around $29, right, you are in quite a good profit, okay? You are in quite a good profit. So if you want to take some profit off the table, it is actually recommended. For example, maybe you are in profit about $2 3 thousand. Maybe you can take like $1,500 off, and then you can leave the remaining position for the earnings lah. Okay, you don't have to risk your entire position, because if let's say Troy this the earning was quite alright and then it recovered back, then you're gonna lose quite a lot of your original profit lah. Okay, so if you feel that you want to take some profit off the table, it's not a wrong decision. By all means, go ahead. But personally, for me, because of how my portfolio is being structured, right, I will be holding on to the earnings. But on top of which, I personally have strong conviction on Dropbox like failing the earnings also lah. Okay, so that's for Dropbox. Aside from that, we don't really have any other short position. So now another short, but nonetheless, right, we do need short position now. Okay, we do need some short position because our portfolio is heavily bullish bias, and I think at this point in time, right, it is a good idea to get in some short positions now. Okay, so now this is S&P futures. So if you manage to get in the S&P futures put option, that's good also, because as I've mentioned in the trading view post and also in yesterday webinar, right, S&P futures options are tradable 24/7. Even, I mean, weekend cannot lah, or market holiday also cannot lah, but you can trade it outside of US market hour, which make it very easy to exit or enter or respond to whatever stuff that is happening outside of US market hour. If you are trading SPY put option, right, you can only trade it during US market hour, which make it quite hard to exit. For example, if let's say Trump announced something in the morning, then you need to wait until market open at night before you can exit. And by the time the market open, right, the price may actually gap tremendously and you will lose your exit window lah. So S&P futures option allow you to have a little bit more what do you call that? Uh room for you to respond lah. So there's no TP for short, but I do believe I've given a TP for SPY, which is if I'm not wrong, it's at 580. So similarly for S&P futures, my target is about 10% down lah, okay? 10% down. So I'm gonna use the opening candle lah, okay? The opening price, 10% down. So it will be somewhere around 5,800, somewhere around 5,800 like that, or maybe slightly lower lah. Okay, but of course, I mean there's a good chance that it's not gonna dive so hard or it's not gonna drop so low. But we will take what we can get lah. Okay, because as the market is going down, right? It will also mean that some of your long position are going to be hurt. Uh, like for example, maybe Alcoa position might be hurt, Axometry position might be hurt, but eventually, you can use the profit from your S&P 500 as a buffer to sort of account for loss on your long position, and eventually when market recover, right, you can take your profit off S&P and then you write your long position back into profit lah. So that's the whole idea. So because of that, right, we don't really have like a fixed profit target, but we want to respond to how the market is doing. And as a long short portfolio, if you are doing spread trading, it is a lot easier to respond because your portfolio is not flying all over the place now. Okay, you have some window. Your window of response is a lot bigger than somebody who is playing a full short portfolio or a full long portfolio. Let's say if you are a full short portfolio, right, you need to time exactly when to TP. If not, market suddenly rally back up, right, you will lose all your profit. Or if you are a full long portfolio, you need to make sure that you get in your long position at the right time. But as a long short portfolio, we are not exposed to this kind of thing lah. We can actually ride out the market very, very safely lah. Okay, so I don't really have a fixed target, but a mental target is somewhere around 5,009, 5,008. I don't really see the market going that low. But that's the level that we will sort of be looking at lah. Okay. So now aside from that, let's go through some of the long position. Firstly, Alcoa. So Alcoa unfortunately is a target of tariff. So in fact, this drop yesterday, it is not a isolated drop lah. Okay, meaning to say Alcoa is not dropping because it has bad fundamental or whatever, but you can see the rest of the market is dropping equally bad lah. Okay, so for example, like Lululemon, Coinbase, Toast, even like no matter good fundamental, bad fundamental, like majority of the stock yesterday were dropping quite bad. So even if you look at things like Russell 2000, right, it dropped about 2% like that. Dow Jones dropped about 1.2, Nasdaq dropped about 1.9. So it is a broad market drop lah. Okay, and meaning to say the drop for yesterday in Alcoa, of course, is partially or fully, depending on your lot sizing, buffered by profit from Dropbox and profit from your S&P short positions lah. Okay, so you don't really need to worry about it so much. And also personally, since I am also playing covered call, right? If you guys are playing covered call, you should be earning quite a lot of money on your covered call. In fact, you could probably exit your covered call with quite a good profit already. And eventually, when the market recover, right, you can take profit on your Dropbox, you can take profit on your S&P shorts, and you ride the Alcoa uptrend back to the top, and then you will profit from Alcoa again. So it's like a win-win situation lah. So that's how you sort of handle a long short portfolio lah. So similarly, Xometry, sorry, I suddenly there's a weak internet connection message show up. Anyway, Xometry also dropped quite a bit. So this is very similar to all other tech company also lah. Okay, if you are in the industrial sector, definitely you'll be impacted by tariff a lot. If you are in the tech sector, especially AI, you definitely get impacted by yesterday drop also lah. Okay, it's a broad market drop, so I'm not really worried too much. So now I'm not sure how much premium you guys managed to get from Xometry, your entry price. So for this position, my premium was 2.9. Okay, I managed to sell my put option for 2.9, and the strike is at 34. So with this, right, you can actually kind of calculate where is your break even price. So the break even price is 34 minus 2.9. You will get somewhere about 31.1. Okay, so this is your break even price. But of course, the break even price is at expiration. Okay, so if Xometry is at $31.1 at expiration, you don't earn any money. You don't earn any money from your cash secure put. You don't lose also lah. But if it is anywhere higher than 31.1, then you are going to earn some amount of premium. There will still be some premium left over for you to earn. But if it goes below 31.1, then you are going to be hit with some level of losses lah. Okay, some level of losses. So if your strike is 33, then you need to do a different calculation. So let's say your strike is 33, your premium is 3.1, then your break-even price is 29.9, meaning you can allow Xometry to go to 29.9 lah, by expiration lah. Okay, so right now you are probably seeing some losses, and that losses are coming from delta lah. Okay, these are what we call delta induced losses, meaning to say the delta that was gained during this downside, right, you need to give it some time for the data to decay when the expiration date get closer. So you will be seeing some losses on your Xometry options, but as we get closer and closer to the expiration, as long as Xometry do not drop below your break-even price, right, you will see your losses recover lah. Okay, so now depending on whether or not you can hold through earning is another option, because the earning is actually on 5th of August. So if let's say 5th of August Xometry drop like another 10%, then you're gonna incur a very big loss lah, because maybe from $31 Xometry may drop to 27.5, and then your cash secure put option is going to be in a very rate positions lah. Okay, so can check how many contract I'm holding. So I don't think that will matter to you or to anyone else, because the amount of contract that I'm holding is like, I don't think it is at the level that most of you guys are trading lah. So so um my number of contract wouldn't matter lah. But if it helps, I am holding 80 contracts. Okay, I'm currently holding 80 contracts. So depending on how you want to go about it, of course, that is not dependent on just my capital alone, but it is also dependent on how is your portfolio is being structured. Do you have as big of Dropbox lot sizing as mine? If you don't have, if your Dropbox position is like very tiny, right, then of course you definitely cannot hold a very big position in Xometry lah, because you don't really have a strong enough hedging position on the other side to help you buffer a bit. Same thing for your MES, your S&P short position. If your short position is like only 1 or 2 contract, but your Xometry is like 50 contract, then definitely that 50-60 contract is not going to make sense lah. Okay, so my lot sizing don't really matter a lot to you guys, mainly because of how the portfolio being structured. If your portfolio structuring is incorrect, then following my lot sizing based on capital is not going to help you a lot also lah. Okay, So now that's axometry, and next I will consider you guys to use somewhere around like $29 as your stop loss, $29 as your stop loss point. So from your strike price, let's say your strike price is 34, my strike price is 34 lah, okay? So from your strike price, you calculate how much premium are you getting, you include that premium in your calculation, and then after that, from your premium, how much is the drop to $29, and then from there you can calculate how much your potential loss is lah, okay? So make sure that loss is something you can handle. So next, Crystal Biotech, there isn't any official trade setup on Crystal Biotech, but if you guys manage to get this position, then I would say good for you because it is doing very, very well. Okay, you can see even though yesterday the market actually dropped by quite a bit, Crystal Biotech was actually green because it is a biotech company. It doesn't really follow the market, okay. But of course, I mean, yesterday majority of the biotech company or pharmaceutical company were green, for example, Kimberly Clark, Biogen, even Pfizer was green. Eli Lilly was green also. So there's a lot of defensive sector were green yesterday, okay. Next, finally, Lululemon. Unfortunately, Lululemon has been taking a beating all the way down to $193. So now my position is very small, very, very small. It's like I have 200 shares, okay. 200 shares. My entry price is somewhere around 250. So 250 currently to like 190, that's about $60. $60, 200 shares, you can calculate lah, okay. $12,000 like that. But that is on top of all the credit and the cover call that I have lah. So if I minus off all the credit and cover call, right, I'm actually down about like maybe $6,000 like that. So I will continue to sell cover call, and then eventually it recover. Then I will write the recovery lah. So depending on how you are dealing with your portfolio, once again, right, you may want to cut loss, you may want to enter a game, but personally for me it's something that is manageable, also considering that I do have quite a lot of profit coming from other positions such as Crystal Biotech and especially Dropbox. My Dropbox position is extremely huge, so I have the ability to sort of hold a position now. Vertical, you can definitely hold to the vertical, but it's a bit tough lah. Okay, at some point, the volatility that doesn't make sense really, in a sense that there isn't enough of volatility in Lululemon for it to recover back up lah. But if your vertical has no more value, you might as well just hold it and let it expire, because if it expire, right, you don't pay any commission, and there is like a glimmer of hope. There is that one slim chance, even if the chance is 1%, it is still some kind of chance that it can recover back. So you might as well hold the positions now. Okay. So the next one is actually Microvast. So Microvast, initially it was recovering quite alright, but during the last week or the last few days, it is also a target of tariff and all the other broad market risk that is coming in lah. So it's coming back down. So I am looking to re-enter this, but I don't think currently is a good idea to enter any more long position than what we are already holding. So I will advise again putting up additional long position in the current correction now. Okay, so now is the time for hedging and looking for some company that are overvalued, that have rallied even though they shouldn't. So we should be looking for some short positions lah. Okay, so now those are most of the positions that we have. I don't think I miss out anything really. I covered everything if I'm not wrong. If I miss out anything that is very important, just type in the chat lah. Okay. So now going forward, there are some short position that I would like to take. Although I really wanted to enter TMC again, right? The market didn't allow me to enter lah, because it dropped too fast already, and then there is a SEC ruling that prevent short sale if the stock dropped more than a certain amount. So I wasn't able to enter it or call for a short entry in the last few days. By the time TMC kind of like chill down a bit, right? I don't think the risk reward makes sense really lah. Okay, because if suddenly like the tariff thing like go away again, then this one gonna spike up again. You do not want to put yourself in that kind of uh risky volatility situation now. Okay, so now one company that I would like to short is EchoStar Corporation. So EchoStar Corporation was something that we were looking at yesterday. It is one of the stock that was spotted by one of my graduate, and they deal with satellite TV, which is like I don't even know it is still a thing. And in their latest earning, right, they went into a very big loss lah. Okay, they went into a huge loss. I think the net income dropped by about 90% plus like that, if I'm not wrong. Yeah, the net income dropped by about 48% like that. So like they went into loss making lah. Okay, initially was profitable, loss making, profitable for a while, and then back to loss making again. So they are doing quite bad. And in fact, the recent rally, right? I'm not sure what caused the recent rally also, but I was looking to short at somewhere around here. And then after that, there was a bit of rally, but earning came in and then it kicked it back down. But I do think that it can go down a lot more lah. Okay, so maybe once the market kind of calm down a bit, we can take a look at this short position. So another short position that was mentioned yesterday, which I would really like to take, and that is Starbucks. But once again, right, Starbucks, since it has dropped 3 days in a row, initially the earning was quite optimistic. It was up about 4-5%, but after that it just closed straight lah. So I would like to take this short once again, but the risk reward ratio is not really that great. So I think we can stick with EchoStar. Is something that we probably can short with quite a bit of room to the downside also lah. Okay, so now aside from that, right, with Dropbox, EchoStar, and a broad hedging from S&P 500 or SPY, and don't forget we are still holding on to VIX. Okay, this is something that we entered very earlier. It was supposed to be our insurance for the next year, sorry, for the entirety of 2025. You should still be holding on to VIX. If something happen and then VIX spike to $40-$50, right, your it is going to pay off lah. Your hedging is going to pay off lah, along with your Dropbox and your S&P 500. You should not be facing a very big downside. You should not have the kind of downside that will ruin your portfolio lah. Okay, with all this hedging in place, but it will also allow us to respond to the market, and we can remove the hedging once we feel that it is no longer necessary. So now there are some long position that I am still looking to enter, but we can make use of this current correction as a opportunity to enter once they kind of like settle down. One of them is Toast lah. Okay, previously I wanted to enter Toast here, but it kind of like went all the way back up. So now the restaurant sector, I believe, is in a little bit of trouble. So I will probably want to redo my fundamental on this again, and we see how it goes lah. Okay, because Shake Shack actually dropped like crazy recently. Shake Shack earning was quite bad, and it dropped by quite a lot. I think Dutch Bro also dropped quite a bit. So it seems like the overall restaurant sector is taking a little bit of a beating also lah. Okay, but nonetheless, right, keep Toast in your watch list also. It is one of those stocks that I believe should still have a very high growth coming in. So next, the next one is a bit how should I call it, is considered a value stock at this point lah. Okay, and that is Decker Outdoor. So now Decker Outdoor recently earnings came out to be quite strong, but after that it just red all the way lah. Okay, don't know how many red candle already, but I do think that at this level it is considered quite value, and Deckers Corporation actually have quite a lot of cash on hand lah. So they are not really hurting for profit. It's just that their growth was kind of like muted which is why the sell down happened. But by no means they are making a loss, or they are in a dire situation. They do have quite a lot of cash on hand to sort of maneuver out of whatever position that they are in right now lah. So once we see some catalyst or growth return to the sector, right, maybe we can play Deckers outdoor also is something that I would like to play. So there are quite a lot of other stock that I previously mentioned, but we didn't really have the opportunity to trade. And that is also mainly because my portfolio is at the maximum margin ready. So I can't place a lot of position ready. That's the reason why there isn't a lot of new trade setup also lah. But I do hope that you guys manage to enter certain position by yourself, especially things like Crystal Biotech, all this kind of stuff lah. So the other one that I do want to enter is also S&P Regional Banking ETF. This is regional banking. Based on the new Fed Vice Chair President, Michelle Bowman. She is trying to ease a lot of regional bank regulation lah, and that in theory should allow banks to free up more cash and then use that cash for further investments lah. So in a way, that is a idiosyncratic bullishness for overall regional banking sector. But right now, we do have other factors in play, which is the potential rate cuts and all the tariffs. So we are seeing a bit of downside here. But once it's sort of settled somewhere, we can actually write the trend back up lah. Okay. The margin on this is actually quite good, especially now that it's coming down, right? The call option should be quite cheap and the margin should be quite good to play also. Max margin, isn't it risky? So max margin is risky only if you don't know what you are doing lah. But if you are if you are able to hedge out your position, if your overall portfolio correlation is very low, if your beta is at a very neutral level, if your overall volatility of your portfolio is well maintained, then maxing out the margin isn't really that risky lah. In fact, even with my max out margin right now, my beta is very close to neutral with the recent entry, and based on that, right, my portfolio swing is still as if like I don't have max margin like that. So it's based on how you manage your portfolio. In fact, I went through this topic quite in detail. In fact, we have one full lesson on this in our last course. If you are a graduate, you can go and access the final lesson on advanced portfolio management. And for those who are interested, of course, you can come for the upcoming course lah. So margin and leverage are not risky. What is risky is that you max out your margin with all long position. Of course, that is risky. Or you max out your margin in some, I don't know, some meme coin, meme stock. Your volatility is like sky high. Your beta is higher than S&P 500 itself. Then of course that is gonna be very risky. But if you have a very well managed portfolio with some short position, some long position, your volatility is maintained, your correlation is maintained, then there isn't really anything to worry about lah. Do you think macro environment will worsen? I don't think the macro environment will worsen, but it is time for market to pull back a bit lah. And just so happen that we have both the NFP and the tariff all coming in for a sell down lah. So I don't think it's gonna worsen until like this kind of situation like that. But I do expect a little bit of retracement lah. Okay, so that's the reason why we want to be careful with our short position. Also, we don't want to go all short position. That's the reason why we are still maintaining some of the long position, because who knows, later some agreement reached and then the tariff are lifted and you see all your stock flying up again. So the only way to properly maneuver or manage this market right now is basically to have a long short portfolio lah. Any other kind of portfolio, right? Highly likely that you are gonna get hit with a very very large drawdown lah. Okay, guys, so that's all I have for you this week. Thanks for attending, and I'm also happy to be back lah. After MIA for about 1 week like that. Okay, guys, so all the best next week. I will still I'll be around, so business as usual lah. Okay, so we shall see how Monday goes, and once again, I want to emphasize on axometry. If you have a very large position on your cash secure put option, please go and review your position, work out the calculation, sit down, take out a pen, a paper, go and calculate. I don't want to see any private messages after the earning asking me, hey, so how. I warn you already, okay? So please go and work out the risk. And if your risk is too much, then cut your position a bit. Okay? So that's all I have. Thanks, everyone.